This week, SOFI received a huge downgrade from an analyst that sent the stock down by almost 10%. However, this isn't the first time that this company has provided a price target for SOFI. So in this video, we're going to dive into some past predictions that this company has made around SOFI's revenue and EPS numbers and go over how much stock should you actually put in this new price prediction. And I'd love to hear your thoughts on SOFI. Go down to the comments section and drop a price target of where you think this company is going to be trading at by the end of 2025. And while you're down there, if you enjoy this video, make sure to drop a like on the video as well and subscribe for more videos like this one. Before we discuss SOFI, let's take a look at the YouTube portfolio. It's currently sitting at a value of $58,296.70. In full disclosure, before we talk about SOFI, I do have 200 shares in this portfolio as well as another 100 shares in another portfolio of SOFI stock. The cost basis in this portfolio is $1,190.32. The current market value is just under $3,000, so my position is up around 150%. And I want to make sure that I'm fully transparent on moves that I'm making within this portfolio as well. And one of the moves I decided to make yesterday is selling out of 90 shares of my Palantir position. I currently have 100 shares. Obviously, it's the weekend right now, so that order won't go through until Monday, but that'll leave me with about 10 shares left in the portfolio. And the reason behind this is just the valuation. I think the value for Palantir has been ran up significantly. I want to pull some money out, and I think over the next couple of years, there's going to be some dips in Palantir stock that'll offer better buying opportunities than right now. So I want to kind of capitalize on this higher price currently and just sell out of a little bit and then potentially maybe build out the position further if we see some major dips in the next couple of years. And if you didn't see my video yesterday, go ahead and check it out. It's about Super Microcomputer. What I ended up doing with some of the profit on this position is opening an order to buy some Super Microcomputer on Monday when the market opens. So that'll help build out a different position that I think has a little bit more upside opportunity than Palantir currently has. And keep in mind that a lot of the reason behind these moves, at least for me in particular, is because I'm a little bit bearish on 2025. I have been stacking a lot of cash in this portfolio as well as my other portfolios because I think there's going to be a lot of opportunities in 2025. One company that I don't think there's going to be a whole lot of opportunity for in 2025 is SOFI. I think SOFI has shown a lot of strength around this $14 to $15 mark. In the past, we have seen this company spike up and then immediately sell off. That has been a very common trend for this company, especially around earnings. However, in my opinion, I just don't see SOFI going back to these $7 to $8 numbers that we saw in 2024. However, there is one analyst that does think that it could head back down there throughout 2025. And that is KBW. KBW is a company that specializes in market research around financial companies, especially banks. And that's why there's a lot of merit put on their price targets that can drive the market in certain ways, like the sell-off that we saw from SOFI. Earlier this week, KBW revised their position on SOFI from a hold position to a sell position, also adjusting their price target from $8 per share to $7 per share. According to an analyst at KBW by the name of Schweitzer, the presidential election combined with the potential of lowering interest rates as well as improving macroeconomic conditions have all led to SOFI stock being overvalued. But the question still remains, how accurate is KBW at analyzing SOFI's metrics? And this article does an amazing job of breaking down this company and what they have predicted for SOFI over 2024 and how those numbers compare to what SOFI actually delivered. And it's titled KBW SOFI Analysis is Historically Dead Wrong by Data-Driven Investing. Let's start by looking at revenue predictions. They were off by an incredible amount when it comes to the top line. So they predicted for the first quarter that SOFI would put up $550 million. SOFI ended up actually putting up $581 million. In Q2, they predicted $568 million. SOFI came through and put up $597 million. In Q3, they predicted $587 million. SOFI beat that by over $100 million, putting up $689 million. And then in Q4, which hasn't reported yet, but KBW expects $594 million, they are expected to come through, however, with $675 million based off SOFI's guidance. That means they predicted a growth rate of 11% in 2024. However, SOFI actually grew their top line by 23%. And that $675 million number for top line revenue expected in the fourth quarter could actually be low. We won't know until until January 27th when they're expected to report their earnings. However, if we look at the last 4 quarters, we can see that SoFi has beat by almost 9%, 5.5%, 4%, and 4%. So they are consistently beating analyst expectations on both the top and bottom line. And analysts being inaccurate for their SoFi numbers is especially true when it comes to KBW and their EPS numbers. We can see that for Q1, KBW expected -2 cents of EPS. SoFi actually came through with +1 cent. For Q2, they expected -1 cent. SoFi again came through with +1 cent. For Q3 and Q4, KBW expected SoFi to basically hit 0 cents or break even on their bottom line numbers. However, SoFi put up +5 cents in Q3 and is expected to do +4 cents in Q4. And this isn't something where KBW looked back at their 2024 numbers and saw how far off they were and decided in 2025 to adjust their numbers off. No, KBW is still coming through with very low expectations for SoFi. They have 2026 EPS estimates sitting at 36 cents compared to SoFi's management team, which is currently guiding at 55 to 80 cents for that year. And this 2026 EPS estimate from KBW is all based on the fact that they believe SoFi's net income margin is headed to 32% by 2026. However, if you look over the last couple of years, the lowest their net income margin has gotten, excluding this Q3 of 2022, was Q2 of 2023 when they hit 36%. Other than that, more recently, they've been around 51 to 60%. And if you add up and average all of these quarters, it actually comes out to around 49%. In my opinion, on the low end by 2026, SoFi could have a net income margin of 45%, but that's on the low end. I think what's more realistic is probably in that 50 to 60% range, especially considering some of the macroeconomic conditions that could help benefit SoFi's business. And on the top line as well, KBW has very low expectations for SoFi over the next couple of years. They're expecting the lending platform to grow by only 5%, financial services to only grow by 46%, and the technology platform to grow by 14%. These are all lower numbers than SoFi's management team. SoFi's management team is expecting lending to grow by 15%, financial services to grow by 50%, and the technology platform to grow by 25%. And this is honestly pretty crazy to me because we've seen that SoFi has consistently provided lower guidance so that they can come through and beat expectations. That is something the management team has shown a strong focus for over the last year, and KBW is thinking that they are going to come in even lower than management expectations, which are already sandbag numbers. The one that surprised me the most is the lending segment. The lending segment only growing by 5% would be absolutely terrible. In my opinion, the lending segment only growing by 15% is still bad. I think overall, if we see interest rates drop as much as we could over the next couple of years, SoFi's lending business should grow by 20+% easily. But one thing you can't deny is SoFi is trading at a premium valuation. That is why they need these higher growth rates to try and justify this valuation, because right now the forward P ratio is sitting at 74.07. Ideally, you like seeing companies under 60. When PE ratios start getting over 60, that is where you start seeing companies struggle to actually keep up with the growth needed to justify that valuation. But if SoFi is able to put up 60 cents in 2026, that would mean that the current PE ratio, this would be a 2-year forward PE ratio, would be around a 25, which is certainly a reasonable valuation. Right now though, for next year in 2025, analysts are expecting 24 cents of EPS with a low estimate of 20 cents and a high estimate of 28 cents. In my opinion, SoFi is in a great position to capitalize on the macroeconomic conditions over the next couple of years. We've seen over the last year or so them focused on net interest income because interest rates are higher. However, if we see interest rates drop lower, they could easily pivot their business to focus more on the lending segment. And that is something that Anthony Noto has been very impressive at doing by shifting the business and the focus of SoFi depending on these macroeconomic conditions. If I had to give a price prediction on where I think SoFi is headed in 2025, I would put my price target somewhere between $16 and $17 per share. I think there's definitely upside for SoFi, and if we see interest rates start start dropping in the back half of the year headed into 2026, I think that'll start getting priced into the stock, and we could see a very good 2026 overall from this company in terms of top line growth as well as bottom line growth. But keep in mind, that is all my opinion. Don't buy a company just because some random guy on YouTube talked about it. Make sure you are doing your own research and looking into companies that meet your risk tolerance as well as your time horizon. If you enjoyed this video, drop a like down below and subscribe for more videos like this one. And as always, guys, have a wonderful rest of your day. And for the joke of the day, why should you invite an ice fisherman to your party? Check the comments down below for the answer. Thanks for watching.